The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I think the big news of the night was the fact that the Chinese market was up 5% in the last hour of trading, believe it or not. If you ever want to see a rigged market, that's the one that happens to be there. So the People's Republic Bank starts buying, I guess, and there's no selling. And so the bids just keep going higher and higher with virtually no volume, but it closes up 4.9%, and don't forget 50% of those stocks are not even trading, so they're still under restriction. So you have to be careful to watch that. We don't have that here. You know, we have enough of a problem with some of the stuff that goes on in our markets too, but we have a much more liquid and viable market than they have over there. So just remember, when you see those figures, either up or down, I'm not sure how much they mean anymore, given the fact that what they're doing with restrictions. So we'll have to wait and see. That was a question posed to me by one of the people in the den that dropped me an email asking me about it. And all I can say is what I'd heard, and that is that it was in the last hour of trading. I looked at the chart, and it was basically a vertical chart, which basically I looked at the time and sales on it, and it was nothing more than the offers being raised all the way up and the bids being raised off all the way up, and an occasional trade in between, and that made the chart candle. But so that's what you're looking at. We didn't respond too much to that. As a matter of fact, in our markets, we are about unchanged to down a little bit, which is really not very much considering we got the almighty Fed tomorrow. This is, each one of these Fed meetings gets more and more press and more, things that people are asking about it and what's going to happen next. All you have to do is to look at the bond market, and it's telling you that this market, they're going to raise rates. Whether it's going to be September, December, February, March, it doesn't make any difference. The end of this interest rate cycle happened about 18 months ago, and, we've been going a little bit higher in rates all the time. Now, mortgage rates and some of these other things have still stayed in the lower range of stuff, but you look at the overall Treasury notes and Treasury bonds, it tells you that that's where you are, with your interest rates. Tomorrow we'll be looking, one of the things I'd like to do on the show is to look at extremes of where the market could go in the bond and note markets, following the announcement. And the other thing is that we're in a really oversold situation now in the bonds, because we've been coming down here, for several weeks. And so even if they do raise rates, the bonds are probably going to rally. That's the key of what I think is going on. And I just look at the charts, folks. I don't know diddly squat about the fundamentals and stuff. And I mean, I have a master's degree in business, and I'd probably have to have a PhD in economics to understand what these dudes are doing these days, because it's different than the old Adam Smith economics that I learned, back in the 1830s. So things are certainly changed. But the Fed has put in a lot of money here over the last 6 years, and I don't think that has been the right thing to do. But we'll let the history books tell us whether that's going to be the case or not. I had a very emotional evening last night. I had a phone call from the hockey players that played on the 1980 Olympic team. Mark and I have been fortunate enough to know these dudes from 1995, and it was really emotional. I couldn't get over how much Mark had affected their lives. I mean, it was really emotional, and I asked them if they would give Paul a call, to let them know, what a profound effect he had, because he did that for a lot of people. But these guys happen to be, relatively famous, and that's the really fun part of this. I have to tell you a little, because it become almost like a family thing, is my sister and my brother-in-law. My brother-in-law works for Seneca Oil, and they own a box in the United Center where the Chicago Chicago Bulls play and the Chicago Blackhawks play. Well, when the two Jacks retired or got out of Boston College, they went to play for played for New Jersey, and Jack O'Callahan played for the Chicago Blackhawks for 8 years, and he still works for the Chicago Blackhawks as a PR man, and he is really well known in Chicago, primarily because his Blackhawks and then also his 1980 thing. And his gold medal is in the United Center. You can see it there with his picture and all the other stuff. But my sister, she had heard about him a lot and talked to him on the phone once or twice, but she had never met him. And last year, the Blackhawks were playing someone, and Jack was there in the building, and I asked him if he would go up to the Seneca oil booth. They have one of these private booths, and they call viewing boxes, I guess, and they have big parties up there and stuff. So he went up there, and of course, there's a security guy there, and the security guy knew who he was, and he let him in. And as soon as he walked into the room, the guy that owned Seneca Oil happened to be a big fan of the Blackhawks and knew him quite well. And he said, "Oh my God," he said, "it's Jack O'Callahan." And so he got to meet my sister and everybody there, and it was really a lot of fun. And they actually ended up doing some business together and became friends. And so it's really quite nice. Yeah, these two hockey players were my students. We picked up another one off the team a little later, but it was Jack O'Callahan and Jack Hughes that we met in 1995 in Chicago. We had a seminar for 10 people for a whole week, Mark and I, and the deal that Mark and I had was that if we didn't make money every day trading, that we would give everybody their money back. And so we had to make money every day for all 5 days. We were able to do that, and so it was a lot of fun. We made a lot of good friends. In fact, all 10 of those people, 8 of them were very, very close to, and 2 of them have since passed away. But it was, really a lot of fun. His wife, Paula, would prepare our lunch for us and our breakfast for us. We had a little catering service bringing everything in. It was up on the penthouse of the building. It was up on the 40th floor overlooking Lake Michigan, and it was really a lot of fun. So we only did 3 of those through the years, and that was the first one. And then we did another one in 1998. We did another one here in Scottsdale in 2001, and with the same type of a program, and it turned out to be pretty good too. But I've known him for so long that it just really chokes you up to realize how important he was. Let's get back to the markets, because I know that's what you're here for. You're not here for a song and dance about people going on into the afterlife. Folks, the breadth of the market still is not doing very well at all. I know the market was up 200 and some points yesterday, but frankly, we're getting more new lows than we are new highs, which is usually not very good. But the market continues to go, in one direction, and that seems to be up. We're coming into these real strong cycle days. We have the Fed tomorrow. Mercury goes retrograde just as the Fed speaks, so my guess is there's going to be some type of a change, and we'll see if that's going to be what happens. There are 3 charts that I'd like to focus on today because they represent 25% of the NASDAQ. I know it's hard to believe, but three stocks represent 25% of the NASDAQ. Now, the first one we're going to look at here is Amazon. And as you can see, we had the big run up in Amazon where it was up $100 and some in one day. Then we backed off into the 24th. And since that time, we've rallied back to the 61% retracement in Amazon. And we've been there for 6 trading days. It's not been above the 530 level. And whether it's going to get above that, we'll wait and see. But it stopped exactly at the 61% retracement. Now, if we take a look at the stock that is the most popular of all stocks, and especially with the NASDAQ, is Apple. And I will, as soon as my little OIs will catch where I have the air, there's little OIs, there we got it. And we'll bring it up and we'll show you the chart on Apple. And it also hit the 61% retracement on Monday. Yesterday we rallied back. We closed around 116 and change, so we still haven't gotten above 118 yet in Apple. and that's also at the 61% retracement. Now, the last one in the group is Google, and these three stocks, Apple, Google, and Amazon, are 25% of the whole NASDAQ index. So with three stocks, you can move that index a whole lot. So this is not a very good representation of what the actual market is actually doing, but that's not what's being reported. So we'll see. Anyway, you can see here that we're also at a 61% retracement here in Google, which had a really strong day yesterday. And so we've had, and this also represents that 135 lower top pattern that Jesse Livermore, Roy Longstreet and his son Bill like so much. So we'll be looking at these really, really closely. I would imagine because of the week of this week being the Jewish holiday week, the volume is probably going to be a little bit less, and we'll see if we have we're going to have some really wild ranges tomorrow with the Fed coming out. We have those wild ranges whether anything happens or not, but we really will have them tomorrow because of the fact that this thing is being blown totally out of proportion by Bloomberg and CNBC and all these other things. And the reason why they do that is they pull people in to watch it, and they get the money from the commercials. It's a bottom line, devil may care type good guy thing where they're trying to make a lot of money, and more power for them. Then what are you going to do? So anyway, these three stocks of that group make up 25, right around, I believe, 25%. It's probably a tiny bit more. If you throw in Microsoft, you'll probably have even a bigger move of those stocks. So with four stocks, you control over 30% of the whole NASDAQ 100 index. If you look at the NASDAQ index itself, it's not doing nearly as well as these stocks, because it's still doing okay, because it's doing better than the S&P and it's doing better than the Dow Jones, but it's still not doing as good as the three major stocks within the index, and that's what I'm looking at. The other thing that I wanted to bring to your attention is there's been some really interesting things come on the internet about how the volatility index has got so many people on the short side of it. In other words, they're looking for volatility, and in fact, it's the greatest number that they've had since they started keeping records, which says that all of these people are going to have to be wrong. Well, I don't know if there's going to be a crash or not. It's set up for one. Because everybody's thinking it's going to happen. That means it can happen. Well, that means it could happen. Who knows what that means? I don't know. All I'm saying is I'm looking at these cycles, and they don't look very good. If you look at the breadth of the market, that doesn't look very good. Maybe I'm wrong. Maybe that big bottom was on August the 24th. But if that bottom was on August 24th, we would be a heck of a lot higher than we are right now, in my opinion. But I don't know for sure. We're going to take a little break here, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into Tiger TV the banking index chart, and we've gone up to that 382 level as of yesterday. We haven't quite got there, so it's taken a whole month for the market to retrace 38.2% in the banking index section, which, if this chart is correct, is telling us that they're probably going to have some higher interest rates, which all the bank does will pass them on to the customers, and that's the normal way they do business, as they should, because they're there to make a profit. And the next chart that I wanted to go into, we've had another question about it, and that is the first chart that I posted into Tiger TV today is the chart of the Dow Jones Transportations. The utilities are still, way in the hole. They're way down where they were near August the 24th, and but the transportations have now had their second ABCD correction. We had one from that lasted from the 6th of July into almost the 4th of August, which was about a month, and now we have another one that bottomed on the 24th, and it should be ending here within a few days. Now we've completed a perfect ABCD pattern right up to the level of the 61% retracement. And if you'll notice, if you get into Tiger TV and get a chance to look at this, this was furnished to me by Jim Twentyman, who was the person that watched these lines, many years ago, because when he was doing GAN lines, he would notice that when you connected two lows, that in the future, those two lows would lead to another high, and that's basically nothing more than the market, repeating itself over and over again. So we're right there. Now that means if the transportations are really strong today, if they get above 8,200, then this line would certainly be wrong, and it would tell you that this market is, still going to go a lot higher, but it has to do that. Now, much of the movement in the transportation yesterday, because there's only a few stocks in that thing, was United Parcel Service. UPS had good earnings, and they were up quite a bit, and that stock was also completing a perfect Gartley at the 61% retracement from the recent high. So all of these patterns have lined up that we're coming into this zone here of what the Fed is going to do, and the numbers are there, and we'll just have to let the marbles fall where they may, and we'll see what happens. But it's lining up that way in particular. The New York Stock Exchange Index, still looks bearish. I mean, it's just been in a sideways move. We have not been above the high of August 27th as of yet, and that's an overall market. And then when you look at the breadth of the market with more new lows, the new highs are being done, and that's on days like we had yesterday. There's a lot of weakness in the market. Now, maybe this weakness disappears and it turns to strength, and I'll have egg on my face. Thank God I love Eggs Benedict, because I get egg on my face quite a bit. But the odds are saying that there's something really big out here, and it wants to go lower just by looking at the chart of the big break that we had down. And if you look at that long-term weekly chart that we looked at, it was the worst weekly start that we've had, even worse than 2000 down move, worse than the 2007 down move. And now we've had the rally back just like we had in 2000 and just like we had in 2007. We're having this 61% retracement. That doesn't mean it can't go to 786 or some higher number yet. Maybe it makes a new high. And if that's possible, my hat will be off to them, and I will bow down to the fundamentalists and go back to my 400-day moving average cross of the 200-day moving average. That's known as the Italian double death cross, if you look that up on Wikipedia. So those are the things that we're watching here with the transportations, the Google, the Microsofts, and I didn't put Microsoft up, but it's the same as the others. But the banking index is the one that has been the leader of the market the whole way up, and it's been the one that has bounced the least, at least thus far. So there's a lot of things that are happening. We have the bond market is going to be, because the bonds and notes are much, much bigger than stocks, so they will be affected by this rate. And I really feel strongly that, I look at the overbought, oversold things. That's really what I'm looking at. And we're really oversold in bonds. So tomorrow, what I'm going to be doing is I'm going to be putting in limit orders to buy, on some type of a panic bottom where everybody says, oh my God, rates are going higher, let me out. And that's where I would be looking to be a buyer, because the market is so extremely oversold, much like what we were on August 24th in stocks with, the stock market down 1,100 points in the first hour. You didn't have to, be a rocket scientist to believe that, it's probably going to bounce. So, okay, we're going to take a little break here. And our next guest will be Janet Yellen. She'll be up with us in just a few minutes, so stay tuned.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart from FBN Technical Research that shows the net positions of the S&P 500 futures by using from the hedge funds, I guess. And you can see that all the hedge funds are heavily short now, so that means we're probably going to get much more of a rally. When this actually data came out, I'm not sure. Someone from the Tiger Den furnished it to me last night. So, but this is a record as far as a number of shorts down in this area, so we could get, the other thing is, folks, is that I could be completely wrong about these patterns that I'm seeing, and believe me, when the market has rallied a month and really hasn't gone anywhere, but it still tells you that, I'm certainly waiting for something to happen this week to see if we're getting ready to turn down. The full moon certainly didn't, the new moon and solar eclipse didn't do anything because we're already into the third day from that. And the big day will be the announcement tomorrow. And then there's a huge day on the 18th, which is Friday. And if the market's really strong into that Friday, then I would assume that we will be, be looking at, possibly a turn around that time. But right now, everybody wants to be buyers, and which is rightfully so, I suppose. But that's what we have going on early this morning, and it's still a bit early. But we will have some more action as we go through this area of looking at what we're watching. I had a great chart, and I cannot find it. It was the Fed funds going back about 30 years to show you the extension of where we are. If you think that volatility index chart that I just showed you there on the S&P is wild, you should see this Fed funds, because Fed funds are at a level, well, we're going to have to go to negative interest rates, which is possible because Spain went to negative interest rates, and a few other countries also did that. But I'm an old type economist. This experiment that they've been doing for 6 years doesn't make any sense to me. That you just keep printing money out there to stimulate something that only a few people can really benefit from. So I'm probably wrong, but the charts are telling me that long-term chart that we're looking at, if that one breaks, that's the one where we were looking at the the 1, 2, 3, 4, 5 expanding top pattern in the Dow Jones. I'll find it here. There we go. And we will bring that up to let you take a look at. This is the one for the New York composite. It's the same, so you don't have to look at it. But you can see we had these big breaks here, and now since that time, it's been a month since this has been. This came out on August the 25th. And so we've rallied for a month, and we've rallied up to a 61% retracement in the S&P. We have, the actual off the August 19th high we have, but we've rallied back 50% in the Dow and 50% in the S&P, and not quite 61% yet in the NASDAQ. The NASDAQ has to get another 50 handles higher in order to hit the 61% retracement, which it'll probably do by 10 o'clock this morning. But anyway, if you'll go back and look at the other times that these red arrows have occurred, you'll notice that each time after the big break, there was a rally back. And that's what this chart will show now when they get ready to post this again, in September. But, we'll wait and see, what the chart looks like. But I can tell you right now that that's what it is going to look at. The things that are different this time, folks, as I see it, is that the Federal Reserve has this. They always have a lot of power, but now they have this omnipotent power where they basically are beyond reach by anybody, and they've trained the other central banks to do the same thing, because they've done the same thing in Japan, they've done the same thing in China, they've done the same thing in the ECU. And so all of this is we're all in the same bedroom together, and it's a giant feather bed. And the question is, who's going to wet the bed first? And then we'll find out, what will really happen. But we'll see if this will turn out the way that we want it to. We have a question from someone in the den about the Bradley model. The Bradley model has been predicting, a down move into September, October. About the middle of October is the time that we're looking at. But we have a super key date coming here on the 18th of this is not February. This is September, and so we'll watch that very, very closely. But the patterns are telling us that we're up in this zone here, and it's acting like it's what it's doing. So we'll just have to wait and see. That's the only thing you can do. Gold and silver are having a little bit of a bounce. Not very much. They're gold's up around $10 or so today, and it looks like it wants to to go a little bit higher too. So we'll have to let the marketing people decide where it's going to go. These commodities still look lower to me, folks. I mean, I know we're having a little bit of a bounce here in some of these things, but you look where they are on longer term, they're down quite a bit. The one thing that I'm watching very, very closely, and that is I'm watching the Canadian dollar and also the Australian dollar, because both of these are related to commodities, particularly the things with the oil and copper and gold and silver and stuff like that. If we take a look at this Canadian dollar here, and that is known as the loonie in the trades. Why that is loonie, I don't know. But the Kiwi happens to be New Zealand, and of course the Aussie is the Australian. But you can see we're coming up to a 20-minute line here. If we can get this Canadian dollar just a little bit higher, about 2% higher, up in that 135 level, I believe it's going to offer one of the best shorting opportunities that you can get while you're doing these things. So remember, that's what we're watching. Last week when we were on the air, I was talking about the possibility of this pretty good volatility of what we're having over this cycle. This was furnished to us by my personal astrologer, Victoria Martin, and it basically shows the solar eclipse that we had, you know, on the 14th, and evidently it was a bottom. It certainly wasn't a top, and now we have the lunar eclipse and the new full moon coming in on the 27th. Now, this is what happened in 1987. We bottomed on a solar eclipse. We ran up into a lunar eclipse, and then we turned around. But this is going to be whether it does the same thing or not, I don't know. But this is the cycle that we're looking at here of whether it's going to actually, you know, commence to fulfill its expectations as a potential high. I'm not predicting any crash or anything like that. I am predicting a big bear market. I don't know when this thing's going to finally roll over, but we're in a bear market. The only thing that I missed, if I missed this at all, it's the fact that, you know, we did make a 1.27 on the New York Stock Exchange Index, and we did make a 786 on the what do you call it, the NASDAQ, and also the IWM. But the rest of the stuff, you know, is just you know, really doing very, very little from the perspective that I'm looking at it. The one that's interesting also to me is the VIX index, because we have a this is just a simple cycle that's here today, but we have a situation where we're pulling down to near the 786 in that gap area, around 20 area. I'm anxious to see what Basil talks about with this, because you know, we got up as high as 53 on the 24th of August. But boy, folks, you would have had to have an order setting up there, because the number of trades that you saw between 45 and 53, you could count on one hand. I mean, it was really fast. I happened to be watching it at that time, and it was a very, very fast market. So now we've calmed down quite a bit, and there's a 30-day cycle that you can see here over the past two cycles. You'll notice the first two cycles were 22 days and then expanded out by 1.618 to 30 days. And so if that's correct, we should be bottoming here in the VIX, which means stocks should possibly be topping, and then we'll see if this is good. This could be off by a couple of days also, but you want to watch that level of 2030 in the VIX, because that's the 786 of the whole move down. And if you looked at that high on the longer term weekly chart up there at that one at the 53.65 level, that was an exact 61% retracement from the high we made back in October of 2014. So yeah, this thing follows fib numbers, you know, very, very nicely. And now we're going to see what happens, you know, with the next leg coming into this. But I don't know what's going to happen with the Fed, and I'm sure someone they have people have their tip-offs of when things are going to happen, and you know, we'll see what's going to happen anyway. Well, this is what it's showing from the cheap seats here in Tucson, Arizona. Oh, by the way, I want to thank everybody for the really nice emails and Skypes that I got regarding Mark. He would have certainly appreciated it, and we'll get off. We'll see what happens with these things as we're going through the day here, and we'll see what's going on here. Okay, we have a question. We have a question about live cattle. This old Rich Anderson's favorite trade. Just give me a second here, and we'll put this up. This is the one that Rich was on last 2 weeks ago, and we were talking about this. And as you can see here, we've got October live cattle are getting down. We have three ABCD patterns completing in live cattle down around the between 137 and 135 is where we're expecting the bottom to come in here on live cattle. Those of you that listen to the show regularly, I try to have Rich on at least once a week if I can. When it's real busy, like it's been, it's every other week. But when we were back there in June, when cattle were trading at about 155, he was saying that they're due for about a 15 to 20 cent break, and 20 cents would bring them right down to this big ABCD pattern that is forming right now. So we'll watch this over the next few days to see what's going to happen. We have a couple questions about the wheat, corn, and beans. We had that crop report, as Rich talked about when he was on yesterday, and really he was on Monday, excuse me, and it was Norwinski yesterday. I got to keep everybody correct. We've had a bounce in the grains. That's basically all it was. Bounce 30, 40 cents. Well, when you're moving $1.50 a month, I mean, in beans like we are, 40 cents is not a great deal. So those are just normal market fluctuations. I don't see anything. The only commodity that has really perked its head up quite a bit has been copper. And, it went from, when we had that butterfly pattern down there at 225, it rallied up to, rallied 20 cents, a 10% rally in copper. That was a great, a large amount. So we want to keep in mind that these things have a tendency to really rally when they go. This is one of the things that you have going on, quite a bit. I noticed now that we've got silver up about 41 cents right now. Looks like we got gold up about $12, it appears, and now it's up 43 cents. So silver's running pretty good. Well, we went down to that 61% retracement at the 1430 level, so it was certainly due for a rally. The gold got to 1102. Which was a buy point that we were talking about yesterday, and held up and never went below there last night. So it does have a positive bias. The key, we're going to come up to a break here pretty soon, but tomorrow is going to be a really interesting day, folks. Try to get a good night's sleep, whatever that means to you. But we'll have a lot of numbers to look at tomorrow. We want to give you some ideas of extremes that could happen, because this will probably be one of the most widely watched Fed meetings in quite some time. And they make all of them that way because that's how they advertise on CNBC, and not so much Bloomberg. Bloomberg is more of a reporting station, but CNBC is more of the Walt Disney of the financial section. That used to be Financial News Network in Los Angeles during the late 70s and early 80s. They had that show on at the market close. It wasn't on all day long, but at the end of the day, it started with the Gene Morgan show. He was a broker at Bateman Eichler, and he brought his Charting the Market was his name of his program, and then they had their guests on from 1 until 5. I was fortunate enough to be a regular on that show with Bill Griffith and Ron Insana, and Sue Herrera, who was actually the manager when it went bankrupt. It was actually a Merrill Lynch production, and they just gave up producing it once stock started to go higher into the 80s. Why, I don't know. And what she did is she went to New York and presented the idea to NBC, and they turned it into CNBC. And so Sue's the one that did the thing on that, and I think she should be getting a gold medal for that herself. Okay, we're going to take a little break. We'll come back and give you a quick update of the review of what we think is going to happen.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
This market opened a bit higher, sold off a bit. Still quite early, so nothing really exciting here. Just keep in mind that the 3 major stocks of the NASDAQ, including Microsoft, the 4 major stocks, more than 30% of the NASDAQ weighting, that's Apple, Amazon, Google, and Microsoft, all hit 61% retracements on their daily charts. If you believe in Fibonacci, that ought to mean something to you. If you don't believe in Fibonacci, that's okay too. You're still a good person. It's just that just look at a different set of numbers, like the Lucas numbers or whatever ones you want to possibly look at. Now, I've posted into the Tiger TV the long-term weekly chart of the Canadian dollar, also known as the loonie, and it is getting ready to make a giant ABCD pattern here, up about another 4%. If we could get it a little bit higher up into that 134, 135 level, that would be something that you would want to be watching. That would be equivalent to looking at the Japanese yen dollar trade at 75, like our leader, King Dollar, Tom O'Brien, was doing 2 years ago when we had the dollar at 75 to the or the yen 75 to the dollar. So that would be the same type of pattern that would be unfolding. Remember, we do have a Fed meeting tomorrow. It's at 2:10 p.m. That's a time that Mercury goes retrograde. I will be really surprised if something really crazy doesn't happen. Not that that's not always crazy, but you'll want to look for extensions on these bonds and notes, and we're going to do that tomorrow. There's no sense doing it today because whatever you do today won't make any difference. Tomorrow will be a difference because what you'll want to do is to expand these ranges out by 1.618 and have an order setting in there in case that it opens within that range. Sometimes you can make your whole month by catching those moves, but we'll wait till we get to there tomorrow. But it's very, very highly anticipated meeting. The market is telling us that rates are going higher. It doesn't make any difference whether it's September or December. Rates are going higher, and it's not going to be the first rate cut or first rate increase. It's going to be a series of them. How long it'll be, I don't know. But remember, it's gone, I believe, 7 years without an increase. So that's it, folks. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.